Hi, this is Jack from Alpha Charts with the State of the Market video. Today is January 16th, 2021. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you like these videos, please like and subscribe to my YouTube channel. I really do appreciate that, and it does help me. Also, I am on Twitter at AlphaCharts365. All right, so let's start with the cues. I'm gonna just move my mug down here. Um, so it's a beautiful uptrend that started once we broke out of this little double bottom looking pattern. And you see the 23-day EMA has been a great guide. We had a little pullback towards the end of the week. Didn't even touch the 23-day EMA on the SPX. So everything looks fine. Maybe a little bit on the heavier volume side, but next week we have inauguration and change of power in the United States. So that may increase the volatility a little bit. And maybe people were getting a little defensive just in case some unknown event happened. But as of right now, above the 23-day EMA, it's all trending up. SPX looks great. Now let's look at the equal weight SPX. Equal weight SPX RSP, if you notice, didn't even come close to the 23-day EMA, and much more on this bar, much more buyers, many more buyers showed up, and it looks like a definitely, I don't know if they call it a spinning top candle, whatever they call it, but definitely looks like buyers showed up. So you see that the market is still strong because it's more broad based. All right, moving on. Cues, same idea, and as you can see, I'm highlighting every time it touches the 23-day EMA, and every time so far it has held and closed above it. And there's another one. So we have 1, 2, 3, 4, 5, 6, 7. 7 times prices come down, touched it or pierced it, and returned higher. I mean, that's pretty strong. It's strong trending market right there. So once again, nothing I'm all that concerned about. This looks great. Nice big uptrend. Looking at the QQQE, which is the equal weight cues. USC didn't even come down and touch it. Again, broad-based rally going on in the market right now. It's not just, Amazon, which looks terrible, like Amazon breaking down. This looks horrible. But it's not just Amazon. It's not, Apple, which again isn't really doing anything at all. Maybe making a little cup and handle here, right? If we get above 139. But as of right now, it's not. It's not doing anything. So it's not participating yet. If they do, that would be like gasoline on a fire. But they're not. They're not happening right now. So you see the equal weight cues. Strong uptrend. Didn't even touch the 23-day EMA. Looks great. IWM, which has been the leader, is leading, right? I mean, not even close to the 23-day EMA. Touched it one time, right back here, first day of the year. Never closed below it. Really strong trend going on in IWM. So the indexes look really good. Looking at some important sectors. So XLF, the financials, we talked about what happens when it gets up to this area. Expectations were that it would need to consolidate, pull back a little bit. That's pretty much what it's trying to do now, right? So it kind of moved higher. Again, this is an area, so kind of hit it. Now it's pulling back. It may need to pull back a little bit more and just kind of bounce around here for a little bit before a true breakout can happen. But XLF is participating. It's leading. It's doing great. So nothing wrong with that sector. Looking at SMH, the semiconductors, another one doing fantastic. Touched the 23-day EMA back over here at the end of December. Hasn't touched it since. Looks really strong. Everything is moving up and to the right. So that looks great. Lumber, we talked about looking a lot like XLF, coming into a potential area of resistance. And it did, and it pulled back. And that's not unexpected. It closed and higher than 23-day, touched it for the first time since November. So you see how strong lumber's been, a lot of demand there, good for the economy, good for everything. So we'll see what happens here. But right now, this is just a expected pullback. We'll see if it's kind of chops around just like XLF and then breaks out. Again, that'd be the bullish scenario. A rollover here, right? If we start breaking these moving averages and they start crossing and things of that nature, that would get me very bearish. But we're not seeing that right now. Um, looking at credit spreads, um, looking at credit spreads, everything looks fine. Let me get the volume out of here. Get rid of these moving averages. Yeah, I mean, so far it's still going from the top left to the bottom right, which is what we want to see, tightening of credit. Right now, this is not really concerned. It's just chopping around. It's done it before, right? Everything looks fine. If we spike up above 154, that would get my attention. But as of right now, I don't see anything problem with this. It's doing everything right and everything it's supposed to be doing. Looking at the VIX, the VIX, a little volatility came into the market, so the VIX reacted, right? It's at 24.3, still under that 25-ish level, but it's right there. Either way, it's just saying that there's some volatility. This by itself doesn't change my aspect. It would have to have confirming things with credit, with some of the indexes, with maybe with the put call ratio, which you see got a little overheated midweek and it just pulled back. This is normal, healthy price action for the put call ratio. The pullback happens. We're still in what I consider a bullish range. I think that's probably the more important thing. This is actually probably very healthy for the market. We've been in this, in this range now for a good bit. So put call looks good. Nothing's really overheated. Value line geometric index, hit all-time highs. So we know that breadth, another confirmation that breadth is really good. Broke out. Wouldn't be shocked if it chops around here again a little bit. So that'd be normal. You have to be careful, false breakouts, right? That would be something that would, if we come back below this area quickly, that would get my attention. But as of right now, everything looks fine. Again, shows you how strong this rally is with put call ratio. I'm sorry, with the value line geometric index breaking out to all-time highs. So again, looks good as of today. Let's look at gold because we've been watching gold the last few weeks, and gold completely broke down from the area that we were kind of watching. It hasn't invalidated yet. I would think that if we get below 166, then this needs a lot more time. We'll see though. And if you look at the gold SPX, gold SPX, it's just hanging there by a thread also on a relative basis to the SPX. Sorry, gold bugs, right now, it's just not your time. There's too many other things that are working great in the market. You see the market, looking at the percentage of stocks over the 50-day, still hanging up there nice and tight. So everything is looking pretty good. So we'll finish off with the Qs. The Qs are, strong. All these pullbacks, basically have not made it, have just made it to the 23-day and hasn't even touched the 65-day yet. So in my opinion, the bull market is still very strong. Things I'm looking for is like the value line geometric index to be a false breakout. That would get me very bearish. Lumber to roll over hard. That would get me more bearish. Credit spreads spiking up. That'd get me bearish. A close below 23-day EMA, right? That would get me a little bit more bearish. But as of right now, we're not seeing any of that. So I still think, in my opinion, it's a very healthy market. We're going higher. Good chance this week will be very volatile, and try to shake out some excessive, if there's any excessive bullishness, um, shake it out. And I think that once these events are gone, there's a good chance that this market, after this week, zooms higher. So hang in there. Maybe a week of volatility coming up. That's what I'm seeing. But I think the market looks really healthy. Good luck, everybody, this week. Take care. Again, appreciate any likes, subscribes, leave me comments. I really do appreciate it.